Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. Whilst the easing of lockdown restrictions around the world has started the journey back to business as usual, the long-term impact of COVID-19 is still unknown. What effect has coronavirus had on investment companies investing in the UK, Asia, and Europe? And how are the managers approaching the opportunities and risks? To discuss this, I'm delighted to be joined by Hugh Young, Manager of Aberdeen Standard Asia Focus, Gervais Williams, Manager of Diverse Income Trust, and Francesco Conte, Manager at JPMorgan European Smaller Companies. Right, on to the questions. What has been the impact of coronavirus? And I'd like to ask that to Francesco.
Good morning, Annabelle. The coronavirus has obviously had a devastating impact on economies. And I suppose in Europe, the main issue whenever you have these crises is whether the whole thing will fall apart. And I suppose the good thing is that actually Europe has come together, and Germany has been quite supportive of the periphery this far. So it's actually quite good. From a portfolio point of view, obviously, we went into this very cyclically exposed. So we've had to tone that down into more sort of defensive, growthy companies. But the opportunities are there.
Well, that's encouraging that there's opportunities there. Hugh, obviously Asia, the origin of the coronavirus, what's been the impact?
Well, it started here, but in a sense, Asia's been an old hand at viruses. So the measures taken in Asia were extremely strict and extremely quick. So there's been a major economic impact because effectively many of the Asian countries closed for business, and it's particularly affected certain businesses. So economic growth has fallen off a cliff, and of course, it turned in many places into recession, and you've seen topsy-turvy stock markets as a result, very sharp falls in stock markets, which for us has given us opportunities to buy either companies we were monitoring but felt were a little too expensive, or indeed to top up some existing holdings as they collapsed. And then we've seen a very sharp recovery as people have understood that Asia seems largely in control of the virus, but the impact is going to be long and fairly lasting. So it's a matter of positioning portfolios so that they benefit from the slightly new ways that we'll be doing business, although in many ways those new ways were already in train before the virus. They'll just accelerate.
Yes, well, we're seeing more cases in the US. I think you're right about that long-term impact. Gervais, in the UK, what's been the impact?
Like others, I mean, we saw an alarming sort of effect of lockdown. We saw that demand fell off a cliff. The ability to supply fell off a cliff. Lots of cash flow was short, companies are coming short of cash flow, and that led to many dividend cuts, a sort of blizzard of dividend cuts we've seen in the UK. The stock market came down very substantially. As a result of that, actually, I tend to be a bit of a cautious fund manager. I had a put option in the portfolio. We were able to book the cash in, bring the cash into the portfolio, and top up some of our holdings at the bottom with the new cash, and it allowed us to recover rather better than the others. So it's been pretty severe. I don't think it's over. Unfortunately, I think a lot of companies are going to go bust in the future. But for now, the stock market's strongly recovered, and everyone's beginning to think about the next stage.
Excellent. Well, some slightly positive news there, amongst some quite negative thoughts. Opportunities. Now, Hugh, you mentioned opportunities. What opportunities are you seeing? You said you've been buying companies.
Well, it's been a variety of opportunities, and some of them have been around for very short time before they've run away. So quite a bit of our activity back a couple of months ago at the real bottom was to add to some of our more technologically exposed companies, a Korean accounting software company, for example, a medical technology company, and so on. Some that we held already, and some that we had smaller positions in and topped up. And in fact, in one or two cases, in the very sharp rally, we've actually taken a bit of money out subsequently. So it's been quite a lot of change, with markets falling 25, 30, well, some stocks are down 40%, and then rebounding and recouping much of their loss.
Yeah, I think technology has been the story of this sell-off, you know, because obviously it's enabled us to work from home, to live, to shop, really everything. Gervais, what opportunities have you seen in the UK?
Well, it's been quite interesting, really. I mean, obviously, a lot of share prices has gone down, and some of the share prices haven't really reflected the underlying operations, which is interesting. But quite a few companies have actually not just been able to steer through this crisis, but actually seen more opportunity along the way. So some of the companies have actually come to the market with more cash raising, albeit at depressed share prices, but with the cash paybacks, which are unusually good. So we've actually been supporting some of the companies which have been in the portfolio to actually grow and take advantage of the crisis. So they're actually bigger and stronger businesses on the recovery. And so actually it's been quite an active period for us, really quite interesting opportunities, and actually hopefully more, not just share price appreciation, but more cash generation and stronger businesses going forward.
Okay, well, that's somewhat encouraging that you've been very busy buying. Francesco, you also mentioned opportunities. What opportunities have you been seeing?
I mean, we went into this crisis, and I suppose the biggest three themes that we were investing in were bottom-up stock pickers, but ultimately you can look at the portfolio top-down. Would be healthcare, and of course healthcare has been that trend has accelerated. Some companies will have been affected. For example, I don't know, hearing aid retailing will have been affected in the short term, but of course people will still lose their hearing, and therefore that will come back very quickly. But on healthcare, for example, online pharmacies, those businesses were really struggling to get a foothold, and really what the coronavirus has done has accelerated enormously the trend. I think in internet terms, I think we're probably 3 to 5 years ahead of where internet sales would have been without coronavirus. Environmental investments, we were very keen on things like renewable energy. That I don't think it's really been affected necessarily by coronavirus, but it's certainly the trend is going to continue. And like my colleagues, tech obviously has been a very big part of the overall opportunity set.
Absolutely. Well, healthcare, definitely. We have investment companies invested in specific companies that are fighting the coronavirus through vaccines or treatments. It's been a very strong trend. I've got to ask about the risks now after the opportunities. Gervais, what are the risks that you're concerned about at the moment?
Sort of, I touched on it a little earlier. I mean, the nightmare is we haven't really been through the crisis yet. Unfortunately, we all know individuals who go bust. There will be a lot of companies going bust. This will lead to bad debts for other companies. It'll lead to banks having write-offs. It'll probably change the behavior of banks. They'll be more reluctant to lend going forward. And it may be even that though interest rates won't rise, the cost of borrowing may rise because the banks become more prudent. So I think there's a really nasty aspect, which unfortunately is still to come, which is going to hold things back a bit. So stock markets may not continue to rise. They may peak out and drop back again for a second bite of the setback. So from that point of view, we're just not sure about the steady recovery we're seeing in the markets. It may be that there is a bit more fluctuations before we get to the end of the crisis.
Okay, some more tough times to come. Francesco, how about you? What risks are you concerned about? Are you concerned about companies going bust?
I think, yes. I think the difficulty will be for companies to manage their cash flows, because take a car components company. They are starting production now, but how do you optimize your production when you're working at 30, 40, 50, 60% capacity? So really very difficult times, I would say, for sort of manufacturing companies to come, and service companies indeed as well. On the other hand, you know, there is this deluge, avalanche of cash that has been thrown onto the markets from central banks and governments, which has to find a home. And so I think growthy companies, or companies that are reasonably defensive in this environment and will continue to grow, will continue to probably expand their valuations.
Right, yes. Well, I can see it's going to be very tough for those sort of automobile type companies. But, you know, some possibility of that happening. Hugh, in terms of your risk, what do you see?
Well, in many ways, there does seem to be a divorce between stock markets and the real underlying economy, which is still going through a tough period. Yes, it's gone through a really tough period. It's opening up again across Asia, but it's not a V-shaped recovery by any means. I mean, I think we're going to see a subdued economy into next year. And of course, stock markets have assumed, well, whether they've assumed everything's rosy and going to revert quickly, or indeed whether it is that effect of all the money that's been pumped in. There are clearly going to be casualties amongst small and medium-sized enterprises, and well, there've been the odd big casualty, of course, as well recently, and that's going to affect the banking system, and that will affect the broader economy as well if the banking system really tightens up. So I think we're far from being out of the woods. So I'm intrinsically cautious, but in a sense that caution has held me in good stead over the last 30 years. I'm a pessimistic optimist or an optimistic pessimist. I'm not sure which I am.
Okay, well, it sounds like there's rather a lot of bad news to come, but you are seeing opportunities and you are buying, and that's positive. I'm now going to ask you, what is your outlook? So, Francesco, what is your outlook for you? What's your long-term outlook here?
Again, on Europe, the issue very often is whether you know, the whole project falls apart, because during times of stresses, the periphery, which is economically weaker, of course, comes under enormous pressure. And so, from that point of view, from the point of view that the ECB has really stepped up its game. Remember, after the global financial crisis, the ECB took several years before they introduced quantitative easing. This time around, they have been as aggressive and as timely as the Federal Bank in the US. So the political agenda is actually very good. On the economy, it is going to be, I think, a lot slower than the markets are anticipating. But again, I would separate between sort of economically sensitive companies and companies that are really doing quite well in this environment, whatever it may be. I think those companies will continue to thrive, because exactly that all that cash that is being printed has to go somewhere.
Absolutely. Well, you know, something to hold on to in terms of positive news there, those companies thriving. Hugh, what's your outlook for Asia?
Well, I've been lucky to have been based in Asia for so long, and when I started here, the outlook was Asia's the fastest growing region in the world, which is a great place to start. And as of today, I mean, it's still the fastest growing region in the world for looking ahead for the next 5-10 years. So you've got the growth behind you, not the gangbusters growth it has been in the past, admittedly, but still higher than you'll find in most other major regions of the world. And then where we invest in smaller companies, there are thousands of them. So it's a rich field to be foraging in. One just has to weed out a lot of companies. But there's some real gems to be found. So combine that with the growth. I mean, it's much, in a sense, much the same as it's been for a long time. just great opportunities.
I should emphasise here that Hugh is joining us from Singapore, so perhaps there are some advantages of doing these meetings by webinar, because we wouldn't have him otherwise. I'm very pleased he is joining us. I like that idea of the gems out there, Hugh. That really excites me. Gervais, the UK outlook.
Yeah, I mean, the UK economy is probably still a bit sluggish, like a lot of other world economies. I think it was fairly sluggish going into this. I think the world economy was pretty tepid before the crisis. I think it'll be slow coming out. I agree with Francesca on that point. I think particularly, unfortunately, with companies going bust and such like, I think the stock markets themselves will get into a period where a lot of companies are de-gearing and they're not putting extra debt, they're taking debt off their balance sheets, which tends to be dilutive of earnings. So I think, unfortunately, the stock markets themselves might end up producing very little return in the next 10 or 20 years, in the same way we've seen Japan since 1989. Basically, the markets go flat. Well, what do investors do at that stage? Well, of course, we pick out individual companies, and most particularly, the UK is very different from the rest of the world in having a vibrant universe of mid and large, yes, that's the same as others, but a vibrant universe of small and micro caps, and that's the area where we can differ. Because if you can buy assets from the receiver or from a distressed seller at the wrong price, if you can transform your business, generate a cash payback, then you can outperform. If you go back to the 70s and 60s, the UK stock market outperformed in main part because it had such a vibrant universe of small and micro caps. We are probably the most sort of well-developed market in terms of small and micro caps going forward. I think they'll outperform by an absolute mile going forward. I don't think the UK economy is going to do much, but I think the UK stock market might surprise everyone by having a long period of substantial outperformance.
All right, so I think in summary, we've got some bad economic news and a bit of uncertainty about stock markets. But I think there is some hope because of the multitude of opportunities in small caps, in areas such as technology, areas such as healthcare. And I think it's a great opportunity for active managers to get out there and select those companies which are going to do well. I'd like to thank our managers very much for joining us today. It's great to hear their views on their specific regions, but I'd like to emphasise we don't know what's going to happen in the future. Investment is for the long term, and it's important to have a well-balanced portfolio. If you're in any doubt, you should talk to a financial advisor. All that remains is for me to wish you and your families well. Thanks so much for watching.